Esta conferencia nació de una pregunta central: ¿cómo construir negocios saludables de Internet? Y esta pregunta llevó a otras más específicas. Preguntas como cómo construir un producto que la gente ame, cómo crear un equipo altamente capaz y complementario, cómo diseñar un modelo de negocios exitoso y muchas cosas alrededor de cultura de negocios.
El día de hoy tendremos charlas con fundadores y líderes de startups como Conecta, Sofía, Venture Studios como Polymath Ventures y una charla impartida por nosotros. Bienvenido al último día de Latam Startup enfocado en cultura de negocios y emprendimiento digital.
Bienvenido a Cómo crear un modelo de negocios exitoso. Esta plática será impartida en inglés por Wenyi Cai, cofundadora y CEO de Polymath Ventures, un venture studio que ha creado más de 50,000 fuentes de ingresos.
Te invitamos a dejar tus preguntas en los comentarios y unirte a la comunidad en discord.latamstartup.club. Bienvenido.
Hello. Good morning, everyone. Thank you so much for the invite. I'm very excited to be here and share some of how we build at Polymath, what we've learned through the years, and methodology. So just as a little bit of a background on Polymath, we are the venture studio for Latin America. We've been building in the region for 9 years. We've developed over 100 business concepts. We have 5 ventures that are operating at different stages of maturity and 2 more in incubation today. We've raised over $50 million in capital across Polymath and the group has nearly 700 employees. So, and the other thing that's important to note, and we'll talk about this in terms of our methodology as well, is we are very focused on building for the middle class and emerging middle class in Latin America. And I think a lot of our methodology is quite focused on how to understand needs of an underserved population, but one that today offers $4 trillion of annual expenditure, and actually is that's the bulk of the spend in Latin America. So our ventures are based on a couple broad innovation strategies. So we are either taking existing industries that serve the middle class well, so for example, microfinance or direct sales, but really doing a fundamental digitization of those industries, which is not just building an app or being able to access things online, but really transforming and rethinking completely the business models that make sense and really take advantage of what digital has to offer. The second broad set of business models that we take advantage of is or I would say it's more e-commerce business models, as e-commerce marketplaces, as well as B2B2C service marketplaces. And these are very well adapted to very fragmented industries, which you see happening across many industries in Latin America. A lot of pymes, whether in the retail space, in the B2B servicing space, we have a company in auto repair, a company in secondhand commerce, in health tech, which is actually in surgeries. So that's a broad second set of strategies, which takes advantage and leverages the actual very fragmented, often informal marketplace across many industries in Latin America. So as a little bit of background on how we build, so at Polymath, we build from scratch. And what we start with is always human-centered design. So really understanding what are the deep needs of the market, but not just stopping with the needs, but really understanding existing behaviors. And this is very important to go-to-market strategies, right? So it's not just about how do you serve customers, but how do you reach them at low cost, right? Which is very important for eventually building a scalable and profitable business. To give you an example, one of the issues with e-commerce and why e-commerce took a long time to take off in Latin America was the cost of acquisition was very, very high versus the ticket sizes, right? So we really deeply understand these informal labor and supply dynamics in Latin America. So for example, in auto repair, out of the 750,000 auto shops across the region, 90% of those are independent small shops that have varying degrees of formality. So how do you really take advantage of that supply rather than rebuilding that supply? The second thing that we do well is really think through the business model. So it's not saying, okay, what is the UI UX or what is the app that I'm going to build? Of course, we use a lot of mobile apps, but really translating the consumer and industry insights into innovative business models. We'll talk a bit more about that, or we'll talk a lot more about that in this session. And we have a strong management consulting toolkit to quickly get up to speed on different industries and really understand what type of fragmentation, what type of segmentation actually makes sense to apply the business models, and where will there be issues in terms of depth of the market, for example, for us really to be able to apply a managed marketplace business model well. We have a lot of global access. The team is incredibly international. So we have access not only to North American and kind of European models that have been tried, but to Chinese and Indian businesses that have been successful, which in my opinion have a lot more applicability to the Latin American context. And so really understanding those business models, the intricacies, why it could work in Latin America, why it couldn't work, and what are really the metrics and the different staging. We don't explicitly copycat, but we do, is after we've figured out what are the needs and what are the insights that we found in Latin America, go and learn from what has been done or what has been successful at a global level. And a network of global VCs for us to, continue to understand how they're seeing the industry and of course bring them to invest. The other aspect besides the customer discovery and the business model side is really actually building good technology, which is hard, it's expensive. Building good product and building good tech is not an easy thing to do. And of course, we have a lot of years of experience doing that. And understanding, I think, especially because we build a lot of service marketplaces, there's a lot around how do you translate offline processes to automation, eventually to AI algorithms. And I think that's not particularly straightforward either. And then I think there's an entire playbook of growth strategies, what is the right technology stack to use, and so forth. And so these are all of the benefits essentially of building with a studio that has all of that methodology, infrastructure, and kind of a functional expertise built over many years. So, and the talent is very strong. A lot of our founders actually come from the business design team. So they're really the ones doing the design process and then eventually jump in to become founders of the businesses. We share, the vast majority of the equity with the founders. Polymath is, we consider ourselves a co-founder in the process, but we think it's very important to have strong founders that are strongly incentivized. And as I mentioned before, we have a very, diversity of nationalities and many other aspects in the group, which I think creates a very dynamic as well as collaborative process and culture. So getting into the content of what I wanted to share today with the audience, in terms of business models, as an overview, right? I generally think Latam has gone through a couple of waves of tech companies, and I think it's ripe for a third wave. So the first wave were more copycat business models, I think best exemplified by the rocket approach. Overall, even though I think the that wave was critical to producing the talent for the second wave, the actual size of the businesses that got built were kind of limited. I mean, the ability to really adapt to Latin America's most acute local needs had challenges, right? And I think what we're seeing today is the current wave, which is addressing the actual local behaviors and needs. So whether companies like Nubank, Kava, Quinto Andar, I think they're very, I mean, it's not that models like them have never existed elsewhere, but I think they really highlighted and focused on a problem that was particularly pronounced in the industries that they attacked in Latin America, right? But I do think that they were mostly designed for higher income consumers. But they've been great successes, and obviously minting this generation of the Latam unicorns and public companies, right? Or soon to be public companies. I believe that the next wave is about focusing on local again, so building on that trend, but going down the income ladder. Because in Latin America, from an expenditure perspective, the Latin American middle class, the annual expenditure is almost 4 trillion. That is actually 7 times higher than expenditure of the high income population, just because the middle class represents about 50% of Latin American population. So that's over 300 million people. And the higher income population is probably 10-15%, right? So it's a much larger share of the spend. And there's massive opportunities that remain. And I think, when serving this population, it's really important to understand, that they have very different behaviors. They're, for example, highly informal, very cash tight. So they're very, very sensitive to prices, right? Lack of trust, especially in traditional institutions and other players. So kind of designing for how to cross that trust barrier, because the lack of trust means that, higher CAC, lower spend, less return, less kind of repeat customers and all of that. And I think, for example, one of the ways to do that is to really understand how to leverage the very strong social behaviors and social influence between family members, between the wider circle. And so this translates obviously to Latin America having such high social media usage, as well as many kind of direct sales business models. So in terms of successful business models, I think when people talk about innovation, I believe that there's not enough discussion around not the technology aspect of it, but really the innovation around the business model, right? And kind of category winners in the space are business model disruptors. And there's risk to that because not all new business models eventually work out, right? But I think that the ones that really are category winners usually are business model innovators. And so, and when you think about building successful business models, it's around real disruption, right? To create this 10x better solution. So it's painkillers instead of vitamins. I've recently heard some things in the US about, no, we're building vitamins rather than painkillers, which I think signals that there's just like way too much money out there willing to finance vitamins. Radical instead of incremental, right? So I always tell our teams, if in the first couple of years of the business, you're working on incremental improvements, like you're doing a lot of UI, UX, like that probably means you're not really building core features that are going to get you to a 10x better solution, right? They're systemic instead of segmented. So what we mean by that is usually you're attacking the entire system where there are probably multiple points of failure. Obviously, that has its own challenges because startups need to focus. But I think especially in Latin America, where a lot of infrastructure is not there, and many parts of the value chain are broken about many industries, I think you have to think about it and at least understand the systems problem. Partnerships instead of owners. So kind of trying as much as possible to be asset light, to interact with different stakeholders in the ecosystem and be able to kind of add value to different people in the ecosystem that you're building in, but not own everything, not control everything, right? You should only control the things that you're going to be 10x better than other people at doing, and let other people who are better at other things do those other things. And I'll give you some examples of this later. You should think of it as cannibalistic instead of additives, right? So really disruptive business models often destroy total market, like total market value in an industry, right? So if you think about, you know, the smartphones, I mean, smartphones completely decimated like the GPS industry, right? Like they just doesn't exist anymore, hardly, at least on the consumer side. And so that's what I mean by cannibalistic rather than additive. And I think that, this is kind of the famous hockey stick curve. And I think it's very important to understand what this really means in terms of how a company focuses. And insofar as it relates to business models, is if you're innovating on a business model, like it's really hard to have smooth and exponential growth in the beginning, because you're really trying to figure out product market fit, and you're trying to figure out product market fit and how does the innovative business model actually work. You're trying to prove out some of like the more critical assumptions on the unit, the new unit economics of this model, right? So the first year should be fully around product market fit. And, I think good investors need to understand that and not ask for, super smooth growth curves and all this kind of stuff, because you're probably going to have to pivot a bunch of times when you're going through product market fit, and having to show smooth growth curves to an like truly seed investor is not fully understanding how choppy and lumpy and difficult it is in that period. Then I think, in the second to third year, obviously it's about finding that there's a couple of growth strategies that can start you on that exponential curve, and of course improving unit economics. And stage 3 is, going all out in terms of growth, which obviously easier said than done, but that's also kind of where you're really starting to see the network effects, advantages in funding, really understanding what your competitive advantages are. So I think that startups generally fail because they're doing the wrong thing at the stage that they're in. So I see a lot of startups that try to prove scalability before they've actually gotten product market fit. I've seen a lot of startups work on efficiency before they've figured out what are some of their actual growth mechanisms that will really, take the business to a very different level. So this is, just an overview of what I think a healthy kind of focus is at different stages of the hockey stick. So I'm going to walk through a couple of examples, because I know some of these concepts are, I think they're very important and they might not be completely intuitive. So one of the companies that we have is called Elena's. And what we found when we did the research is that, 50% of beauty and personal care in Latin America is bought through direct sales. And that's a very old business model. I mean, some of it's still done through paper catalogs, and very old businesses, not necessarily very old businesses, but very old business model, and very vertically integrated. Everything's owned, you need to have your own direct sales force in order to actually sell products. So that means lots of smaller companies are not able to do that. So that's kind of the direct sales industry, but it's humongous, right? It has 11 million women in Latin America selling direct sales of different categories, not just beauty. And so what Elena says is a social commerce, social selling platform for lifestyle products in Latin America, and very much leveraging off of that same kind of behavior around people trusting and wanting to buy from their friends and family, as well as people really being quite interested in making additional income and hustling, for that second income or even primary income. And so one of and the company's 3+ years old. We've already achieved annualized GMV of above 70 million at this point, 40,000 active monthly sellers. The company continues to grow. I mean, we'll still grow easily 5x in 2022, and expanding beyond Mexico and Colombia to Brazil. So, everything's going great, right? But I'm going to go back to kind of earlier times and how uncertain it was in that time, and how did we really find the business model. So if you look at this, it's only after we reached product market fit that we then went and found the growth mechanisms, right? It's not like, oh, you're just growing at an amazing rate, like continuously, and that's the only way that a company can be successful. So again, really kind of, but once you reach it, you'll see it in the numbers, right? And so I think this is also a little bit the difference between a venture studio model and a venture capital model. Is venture capitalists should be very good at recognizing once you've reached product market fit. I think studios, by building from scratch, are the ones who know how to get to product market fit. So in terms of our methodology, we go through, these are 4 of the initial stages, right? So we have an ideation process in which we uncover insights about the demographic and about the industry. That usually translates to 8 to 10 business concepts. These are like the 100+ concepts that we've developed. We usually test 3 to 4 of them in prototypes. So we actually build them and arrive at one validated concept. And that's still through kind of prototyping, which is fake kind of, right? You're mainly trying to look for desirability and understand, what does the business look like, what's the market size, and so forth. Then we go into validation, which is super important around building a real MVP. So that means we're very strict about how we build MVPs, as in they're not supposed to be overbuilt, right? Because that, I think the whole point is to see whether if you build a crappy product, people still like it, because that tells you that there's an underserved need, right? And so, there's learning cycles within these MVPs, and that's also when the founding team kind of comes together. And as I mentioned before, a lot of times that founding CEO comes from within the team that has been leading the design and validation process. Then we go through what we call PMF. So this is the product market fit period. As you can probably tell, we're really obsessed with PMF. And so that's why we have a whole phase named after it. And we have a proprietary process internally that's really about kind of how do you continue to build, test, and learn. And what we're really doing is forcing pivots that you probably would have done in year 2 and 3 of the business into the first 12 to 18 months of the business, and really focused on building this 10x better product. And then after that, when do you arrive at PMF? It's not like magically in month 12, like sometimes it's a little bit earlier, sometimes it's a little bit later. But then we go into acceleration, which is about scaling, but scaling in a way that it's not just throwing money at it. It's really also understanding what's reliable, what's scalable, and what kind of allows you to be improving your unit economics rather than making it worse. So going a little bit deeper into these stages, this is our kind of flow for ideation. This flow gets a little bit faster if it's an industry we already know versus a new industry. These numbers are probably more closer, that this timeline of 13 weeks, I believe, is closer to like if it's a new industry, we've never really touched it before. And so we go through a research period, which is mostly primary research, supplemented a little bit by secondary research. Synthesis is the most important period. Is really transforming these observations into insights. And I'll give you some examples in a little bit. That's kind of the key, right? What you want to get to, or what we try to get to, is you get to insights that even industry insiders will say, oh, I've never quite that sounds right, but I've never quite articulated it that way, right? Once you get to that depth, your ability to then expand and really create novel concepts, it becomes quite powerful. Then we go through a concepting period of a couple weeks, where we literally, come up with hundreds, if not, 1,000 ideas, contract it back down to 8 to 10 that we really develop. And then some of those are chosen to go forward with prototyping. And prototyping is a very combination of, what you would normally think of as prototyping, user interviews, but also business model and really developing the right way to think about the key assumptions of the business, right? So to give you an example of this, with one of our companies, Aflore today is a direct, it's a MFI, microfinance 2.0. And the way we came up with this was we chose the sector. We wanted to, be in financial services, financial inclusion, fintech. We interviewed around 20 people. We usually like to interview what we call extreme users, so people kind of on the edges of behavior. They're usually more articulate. And we found our first, without meaning to, we found our first informal advisor or consejero, right? And Zunilda was a hairdresser. She owned 2 apartments that she rented for income and was in the process of buying a bus. So super insane, like really, but actually this happens more often than you would think. And what we realized through interacting with her and the role that she played as like a financial advisor to people around her, was very important for what was going to become. So obviously that, we met many other people. We distilled everything into 8 insights and 8 opportunity areas. And one of these opportunity areas was give a familiar human face to financial institutions, right? Which is, and the important word here is familiar. So, all of the banks that put beautiful people smiling on their ads, like it doesn't really matter to this population. It's about somebody they know and they trust, right? So out of the concepts, one of them was called empowering informal advisors. So allowing these people to sell bank products to earn extra income. Then we went into prototyping. We realized that actually the bank products didn't work. So we needed to combine both the channel as well as products that were customized to this segment, right? And so today, Aflore is this mobile-enabled, mobile-first direct sales channel for financial services, focused mainly on loans, but also providing other financial service products such as insurance to this population. And these consejeros, like Zunilda, are still the bedrock of the company, right? So they are still the way in which we bring customers at a very low cost, that we're able to service them at a fraction of the cost as existing microfinance, and we're able to control the risk much better than microfinance. And those savings then get passed on to the end consumer in terms of much lower interest rates. So that's business model innovation. Validation, I think, I think most people know what an MVP is. I think easier said than done. I think it's very easy to build MVPs that are overbuilt. Sometimes it's you build MVPs that are underbuilt. So we spend a lot of time thinking about what are the key assumptions of the business? What are the things that, are deal breakers for the business? And we explicitly design the MVP and sometimes even tests that are separate to the MVP to address those assumptions. So we have a list of those key assumptions, and we really think about how does the MVP solve for that, or how do other tests solve for that? And we don't move forward until those key core assumptions are validated during this period. So very scientific in the way that Polymath kind of goes about the validation process, right? Because I think this is also very interesting and, related to the culture and how important culture is for success. So intellectual honesty is super key. Intellectual honesty is a little bit conflicted with the founder mentality, because to some extent as a founder, you need to be really persistent. You need to believe when nobody else believes, right? So So I think the way that we kind of try to do it at Polymath is we want that founder mentality, right? Of pushing forward, keep thinking through how to make it work. But we have a very disciplined process to help with intellectual honesty. And I think the other part is that since the business design team, they can say, hey, this is not working. Let's go back to the drawing board, or let's go back X number of weeks to kind of the insights or another concept. I think that also allows for a little bit more intellectual honesty during these validation periods, right? And then the product market fit period, I mean, we build lots of versions of the product during PMF. I think we basically, the most important thing we do, because at this point, the companies are really different. So it's not that you have a week-to-week process that's the same as when you have during ideation. But what we do during this period that I think is very important is we have a learning cycle process that forces learning. I mean, obviously we run OKRs, as I hope most startups do, but like, it's really not just about the fact that you have OKRs, but what are those OKRs? Like, it's not just about, you need to achieve certain volumes to be able to test things, but it's not really just about growth, right? More importantly, it's about, do you have product market fit? And you don't get to product market fit by just saying like, oh, this is my target for the month. No, you get to product market fit by really thinking about, what are you trying to prove? What are you trying to learn? What is your assumption about your customer, about what they need, about what that feature or that value proposition is going to solve it for them? And you need to really kind of test, iterate, and even admit that it's not working. Right. And so this whole process is why we're able to push for the learning cycle, the OKRs and so forth. What we're really able to do is faster versions, like radically different versions of the business and the product, and pushing so that the business either fails or it pivots in a much shorter period of time. So not over 2 or 3 years, like over more like 12 to 18 months. So to give you a live example of Elena's, this is even like a longer, this goes back further than the previous graph you saw, right? Because what you saw before was September 2019 to like November 2020. But if you go back a little bit further, which is like the year before, which is the product market fit period, you'll see that we radically changed the business. I mean, if you include 18 months, we radically changed the business like 4 different times until that hockey stick took off, right? So first we started with Elena's 1.0, which, by the way, there was like validation even before. So technically this was like the 3rd version of Elena's already, right? But this was like, a proper launch of the company. We had decided we were going to launch the company, and these were not just MVPs anymore. And so Elena's 1.0 was selling direct sales products of other direct sales companies, right? It was more like, we have this digital skin on top, it was more, skin's not the right word, this digital tool for direct sellers to sell existing direct sales products, right? But the value proposition was kind of poor. And this is, I think, why all these, innovation projects that these huge direct sales companies have done have generally not worked. Because the value proposition, once you're a seller that knows how to sell for that company, like of just digitizing it, I mean, people are doing it through WhatsApp or like these PDFs of the paper catalogs anyway. So like, what is like a standalone company going to do, right? Then we said, okay, let's expand to other categories. Like, let's widen the catalog. And that is a big differentiator, because that's something that digital business models do well, right? You can bring on a huge catalog. The catalog can be easily searched, curated. We can bring on, we can allow people to sell many categories so they can sell more, and then it'll be more sticky, because anyway, direct sellers sell from many companies. So if they're at Elena's and we have everything, then they can sell everything at Elena's. So that was the second version, which was good. Like, you see that when we did that, sales grew, but it was not a very profitable model. It was operationally very heavy. because we were the retailer. I mean, if anything, it was terrible because we were buying products from retailers and then selling it, without obviously any markup because we were just trying to test quickly. And then we said, okay, but this multi-category thing was the right thing to do. Now let's make it an actual scalable platform. So let's make it a marketplace. So that meant we built a side of the marketplace, which was allowing smaller vendors to upload their products and so forth. So while we were doing that, sales dropped a little bit. But obviously it was a much better model in terms of less capital intensive, less operational burden. And then, even though it was growing well, there were still other kind of unit economics challenges and so forth. And it wasn't until we switched from, we stopped our end client focus, because up until here, you could still order products directly from Elena's. We made it so you could only order it from the seller. And there were many other things that changed. So it became more of a B2B2C model. And that's really when everything took off. Also helped that pandemic hit, but I don't think it was just the pandemic aspect. So this is a good illustration of why we're why we think a lot about business model innovation, but two, what is the methodology and the steps and the very kind of non-linear or non-exponential journeys needed to find an exponential model. So maybe the last thing I'll share around successful business models is certain mistakes we've made in the past, and examples of how to do this well, right? And here I've summarized 4 learnings. These learnings are here because there's companies in our portfolio that have failed for these reasons. The examples on the right-hand side are successful companies, because you guys haven't heard of the companies that have not been successful, probably. So, but these are like real lessons, as in lost a lot of money because we didn't pay enough attention to this, or we didn't know about this, or didn't understand the importance of this, right? So the first one is really ask yourself like over and over and over again, why what you're doing hasn't been done before, right? So there are really good reasons why certain sectors remain informal, fragmented. You really have to understand them deeply before you think you can do better. Like, I hear a lot of pitches from entrepreneurs that are like, this sector sucks, or, the banks suck and they have terrible UI and all this kind of stuff. And I'm like, yeah, that's absolutely true. You're right about that. But you haven't understood deeply yet why the players are there, right? Like, it's not just because everybody else is stupid and you're smart. And so I think we made this mistake, right? I think sometimes the industry, the shape of the industry, or the kind of, to give you an example, actually the first version of Autolab didn't scale very well. The first version of Autolab was that we actually ran the shops, right? We ran the talleres, and they were very professional. We employed the mechanics. It was okay, but it was very difficult to scale. I mean, the labor problems were very significant, and I think it's because there are deeply ingrained labor cultures for mechanics where they don't actually want to be formal employees, right? And actually, the incentive is that these jefes de talleres, they want their own shops. That's a really interesting driver. So if today what we do at Autolab is we partner with independent shops. We help the shop owners, or we help these jefes de talleres that want their own, owned shop. We help them, start a new one. And that has worked amazingly, right? And we've scaled in the last 2 years from 4 shops in Bogota to 150 shops across Colombia and now starting in Mexico. So really ask yourself, like, why it hasn't been done before, and are you really kind of understanding what are the barriers and what are the things that can be leveraged, right? And the second one is, what is the sector's key business challenge? Because solving this problem gives a defensible advantage. So you need to be really specific about what actually is the dynamic of the industry that your digital business is going to disrupt. Just saying the industry is inefficient is not enough, right? I mean, it's true the industry is inefficient, and probably the incumbents don't care about becoming more efficient, but that's not enough of an insight to really understand what you're solving for. And so oftentimes there are these like underutilized resources, or they're interesting behaviors. And so they can be leveraged. So if you look at a Flote, right? So we have these consejeros, and really kind of what's the interesting insight? The interesting insight is that on the industry side, actually microfinance is very, very inefficient because they have a very high operating cost, because they have to send these credit officers into the field, and they employ them fully, right? And it's just very inefficient. So, and whenever they try to make them give more loans, the risk is just bad. So it's and that lack of efficiency basically just continues getting passed on to the end customer, right? With very high interest rates. And so, but one of the things we realized is, hey, there's a lot of these women that are kind of behaving as these financial counselors already with great results. They're basically these underutilized resources, right? And so think about, so what we're really solving for, I mean, on the consumer side, we're solving a lot for trust and all these kind of things. But on the industry side, we're solving for the fact that there was a particular kind of like employment structure and operational structure and even like risk assessment approach that could be disrupted, right? The third one is, all companies are part of a system. Remember, in the kind of list, I said solution should be systemic. So you need to understand the system and what is the leverage and what is the drag, right? So especially in emerging markets, many parts of the system are broken. And you need to probably solve for multiple problems to really crack the problem. That's hard as a startup, because you have limited resources, limited time, limited everything. I think you need to understand where is the biggest leverage point, right? And what's going to drag you down. So, for example, we found over time, and probably a little bit late into the process, that actually a big part of what is, difficult about the auto repair industry is the supply chain. And like, we don't have enough time today to get into why that's the case, but it's not that we didn't look at it before, but it took us a long time to understand just how critical it was. And so I think that is something that we could have done better earlier on, right? And in terms of customer segmentation, I think it's very easy to see a very large market and say, like, let's go, right? You need the big market. Like, I'm 300% in agreement with that. But during validation, what we call our validation and PMF stages, we're like not interested in the large market issue. I mean, that was done in ideation. What we're interested in at this point is essentially small segments. Segment, what is your beachhead segment that you're going to be able to deliver the 10x better value, right? So in the case of Elena's, 11 million women doing direct sales in Latam, very big market, yes, okay. But it took us time and a lot of focus to understand who are going to be those early adopter sellers, and very clear, they have a very specific profile at Elena's, right? And that's kind of, I mean, now we obviously have more sellers beyond this, but for the first year and a half, those were the ones that really drove us to be able to achieve product market fit. So I'm going to stop there in terms of the presentation itself, and then I'll get to questions.
Llegó el momento de las preguntas y respuestas. No te quedes con ninguna duda y aprovecha esta oportunidad para aprender.
Te recordamos que no existen preguntas incorrectas, no hay nada que temer. Te invitamos a dejar tus preguntas en los comentarios de la transmisión de YouTube. Hi, Wenyi, how are you doing? Thank you so much for your presentation.
Of course.
It was really amazing. I think that all the entrepreneurs that are watching this right now or in the future will really be thankful for all the information that you shared with us. So let's see. Right now, we don't have any question in the comments, but if there's a question, let's give them like a minute to put it through. In the meantime, I want to take this time to thank you for your participation on this event in the name of both Aqueducto and the small team that was put into work to make this event happen. That we are really happy that you were able to join us with this presentation.
No, thank you so much. My pleasure.
Okay, so I really think we don't have.
Okay, no one understood the presentation.
No, I'm sure they did, but maybe they just don't have any questions. So I'm gonna go ahead and wish you the best of luck on everything that it's happening right now with you on a personal level and with Polymath Ventures. We really wish you the best and on your journey, and
Thank you.
hope that everything's great.
Thanks so much. Have a wonderful day. Muchas gracias.
Adios.
Chao.